Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at the gold market. Here's a lot of interesting stuff actually has happened and is going right now. So if you remember, in the weekend we talked about the potential head and shoulders pattern because overall performance here stands nice and we have a grabber, this almost bearish engulfing, bearish reversal session, which actually has given us nice bearish engulfing. And following just a normal common practice of trading engulfing patterns, it usually takes the shape of the ABCD pattern on our time frame. So usually market moves in the same direction in the length, and the distance equals to the length of the pattern itself. And that's why it very often takes the shape of some kind of the ABCD pattern. That's why our actually major scenario that we're considering right now is a potential ABCD pattern with supposedly retracement back to the 1955 area, 30% support. Another logic why we could see the 1955 is based on the butterfly. So usually when the butterfly completes, it's a minimum reaction on the butterfly, and when it's treated completed, is a 30% retracement out of the target. So out from the 2055 area. Yesterday market has dropped, as we said, right to the neckline. Take a look, we even haven't got any slope with the neckline, it's horizon, which is actually great. The shape of the hand shoulders in general looks very nice. And here is a very interesting moment that market has formed a kind of the high wave indecision pattern, which seems important. It's because downside breakout of this pattern means downside continuation, as you know, upward breakout means upward continuation. But the problem is that the top of the right arm should be slightly above this pattern. It should be around 20-30 area. And here's important thing to watch for. It's because the head and shoulders pattern might be also a great indicator, as you probably know, and we very often use it in this way. Because if market will not turn down from the 20-30 area and start moving higher, it means that no downside retracement will happen and market is ready to show another upward swing. The same story as we today talked about the euro currency, where actually 109.70 resistance, also important level that could point us the direction for the next step on the euro currency. We should understand that market currently stands under opinion that Fed will stop rate change in May, which provides bullish sentiment, and any failure of any bearish patterns currently is absolutely normal thing, because market actually preparing for a pause of the Fed policy, which looks more dovish. When it will be some frustration and disappointment that could come as soon as in June, as we discussed, this is a different story. But right now, despite how good pattern might be looking, we still should be ready that it might be broken as well. So that's one of the possible scenarios here exist, despite that we have all the stuff with the butterfly and great engulfing and so on. On the follow time frame chart, take a look. Currently we're watching based on the harmony of this pattern. Area, as I said, 2030. We are dealing with the 127 butterfly, not 1618, because the top stands in 127 from the shoulders. So and from that standpoint of view, that's the point that we're considering. On the hourly chart, this is one of the scenarios how this level might be achieved. So here we have minor hand and shoulders might be formed, reverse hand and shoulders, and if you trade scalp trade or you trade on intraday charts, that's the pattern that you actually could consider for intraday trading. It's once market complete the neckline with the pullback somewhere into 1995 area, 1997 maybe, right at this level. That might be the point to consider for taking the long position, with the minimum destination point 2030. But if hand shoulder starts to fail, That might be great opportunity to take the long position, with making the bet on the failure of this pattern. Currently, based on this shape, I wouldn't say that hand shoulders looks bad, because take a look. We have clear slowdown of the upper direction on the left side of the pattern, acceleration of the bears on the right side that it should be. From that standpoint, by the market mechanics, this pattern looks really nice. Another tricky moment, guys, why I'm speaking a lot currently about the possible failure of this pattern, is this divergence as well. So divergence is just taken out of this top. So as you understand, although we have clear pattern, it is not, well, it carries some risk. That's why. Here's two actually ways how you could trade this pattern. First, as I said, if you're a scalp trader, you could consider long position. This market is going to the short. Those who would like to take the short have to keep an eye on the 20, 30 area for short position taking, and then you have to closely monitor on the price behavior. Market has to turn down right from this point. If you will see that market starts creeping higher, returning back to the 1240, 1242, you should close your position. That will be signs that probably hand shoulders are ready to fail. And the market could show the upward breakout and upward continuation. Although upside potential, as we said, not really big, is 2060, 2066 area, but for intraday trades, it's rather solid distance. As $30 per contract is a big distance. So, but hopefully everything will go nice, and we could get first is better entry point on the daily chart around 1955 maybe, and here's also we could get the great scenario for taking the short position. So we will see.